Broadcom just reported Q1 FY2026 earnings tonight, and the headline numbers are exactly what AI bulls needed to see. Let's get straight into it. EPS came in at 2.05 adjusted, beating the 2.03 estimate. Revenue hit $19.31 billion versus the $19.18 billion expected, up 29% year over year. Clean beat on top and bottom. But here's the number that the entire market was watching: AI revenue. Broadcom's AI semiconductor revenue came in at $8.4 billion for the quarter, up 106% year over year, and above even management's own $8.2 billion forecast. That is custom AI accelerators, that is Ethernet AI networking, and that is Broadcom cementing itself as the number 2 AI chip play behind NVIDIA. The profitability picture is just as strong. Adjusted EBITDA hit a record $13.1 billion, holding at 68% of revenue. Free cash flow was $8 billion, that's 41 cents of free cash for every dollar of revenue this company generates. Now for the number that absolutely blew the roof off: Q2 guidance. Broadcom guided Q2 revenue at $22 billion. Wall Street was at $20.4 billion. That is a $1.6 billion beat on forward guidance, the kind of number that reshapes narratives overnight. AI semiconductor revenue for Q2 is expected to hit $10.7 billion, which represents 143% growth year over year. The acceleration is not slowing down, it is speeding up. CEO Hock said it plainly in the press release. AI revenue came in above forecast. AI revenue growth is accelerating, and the company expects AI to represent 68% of semiconductor revenue next quarter. CFO Kirsten added that the company returned $10.9 billion to shareholders in a single quarter through dividends and buybacks. And on top of that, the board just approved a brand new $10 billion share repurchase program running through the end of 2026. The one soft spot: infrastructure software revenue came in at $6.8 billion, slightly below the $7 billion street consensus. That is the VMware segment, and investors will want to watch whether customer renewal rates hold as legacy contracts come up for renewal later this year. Going into tonight, the stock was down about 8% year to date, even as the business was putting up record numbers every quarter, with 28 out of 30 analysts rating this stock a buy, and a median price target of $458 against a pre-earnings close around $314. The gap between fundamentals and price was sitting wide open. Tonight's $22 billion Q2 guide is the catalyst that closes it. The conference call is live right now at 5 p.m. Eastern. The backlog update is the single biggest variable still on the table. Last quarter, it was $73 billion. If that number grows tonight, this stock has a very strong case for a sustained move higher. Like and subscribe for the more earnings breakdown the moment it wraps.